Welcome to another edition of Focus on Alternatives, an educational series partnership between ADISA and Real Assets Advisor magazine. Today we have Larry Lyons with Kalos Financial, and today we're going to be talking about the endowment model and the endowment model for investing. But Larry, can you just start us off with what is that?
Well, a lot of people do confuse it when they hear the word endowment. They think, well, you must manage money for an institution, and that's not the case, at least what we're talking about today. And so the reason we hear endowment model investing is because really it's past success. And so it was really instituted by David Swensen at Yale. He's probably the most renowned for endowment model investing, at least the concept. And so if you go back and look at over time and look at history of the performance of endowments, it's been quite successful. In fact, it's far exceeded in many cases what the stock market has done overall in general. And so there's been a trend to try to find a way to replicate that and make it available to retail investors today.
So is it possible? Is endowment model investing appropriate for individual investors?
Good question. And to use the very legal term, it depends. And so by that I mean, of course, it depends on what the client's objectives are and what their time horizons. Of course, we were talking off camera a little bit earlier about endowments, and endowments manage money in perpetuity. At some point, we expire. So we don't have an indefinite timeline to manage our money, and at some point, we do expire. And so the transition of those assets have to go to someone else. But in general, you're talking about a 25 to 30-year time horizon for most individuals. And so with that time horizon in mind, that is suitable for a long-term strategy for part of a person's portfolio.
That makes a lot of sense. So what are the key benefits to investors in endowment model investing?
Right. So when you think about investing in general, obviously one of the big keys is diversification. You don't want to be all in the stock market, all in the bond market. So you utilize all your resources that are available. However, with most retail investing, most people are only accustomed with stocks and bonds. And when it comes to the endowment model investing, you're really talking about diversifying even further beyond the normal stocks and bonds. Also, you're looking at assets that are non-correlated to the stock market. You don't want to be performing in lockstep with whatever indices you plan to follow, whether it's the S&P or the Dow or Lehman Brothers. So when something is going up, maybe some other assets are maybe more flatlined or perhaps even negative in some situations. And then the other reason is also a good source of income. If you think about today's retirees, the biggest unknown is healthcare probably for all of us. How are we going to fund that? And it concerns a lot of people. And for those that are on limited means or on fixed incomes, they need to try to find other sources of income. And we all know what the state of the bond market has been in, with interest rates being extremely low. So what you'll find in the alternative space when you utilize the endowment model concept is investments that do provide very good sources of durable income.
So let's take it the next layer down. Walk me through what are the specific types of investments that you would use in this type of investing strategy?
So I said earlier, of course, most people are familiar with typical stocks and bonds. But if you think about the endowments and what they've done, and Swensen really pioneered this. If you look at Yale's endowment allocation today, in fact, you could probably go to just about any major endowment organization and look at their annual reports. And if you study how they've allocated their assets over time, they have actually transitioned away from the stock market, mainly because of the volatility that's involved. And the premium a lot of times has already been realized in those stocks once they hit the market. So Swensen started to see these trends, and over time he started to reallocate Yale's endowment to more what we would call non-traditional or portfolio diversifying type investments that typically were not available to the retail investor. And by that I mean you're talking about private equity, you're talking about real estate, you're talking about absolute return strategies, maybe even venture capital in some cases. So these were assets categories that in times past have not been available to the retail investor.
So to your point there, how do financial advisors implement this type of strategy for the retail investor?
So the good news is it does take an advisor to be able to do this. And it's hard to get access to these types of investments beyond stocks and bonds that are in the retail market space. So utilizing an advisor that you trust and have worked with and developed a relationship with, particularly an independent advisor, typically will have access to these non-correlated, non-traditional type asset classes that we mentioned: real estate, venture capital, private equity. They may not all be available at every firm that a client may try to work with an advisor at, but at most you're probably going to have good access to a wide variety.
So Larry, you were just talking about investors. Is this just for the large, high net worth accredited investor, or can the mass affluent investor also participate in endowment investing?
It's a very good question. When you hear the word endowment, most people would think about super accredited or very high net worth investors, and it used to be that way. However, in today's marketplace, these investments are becoming more readily available. Not all of them are totally available today, but in the proper fund structure, which we're starting to see a lot of evolution in fund structures nowadays in the marketplace, I think the retail investor will have access to these. If not totally today, they will in the future.
Well, Larry, thank you for joining us, Kalos Financial, and thank you for watching. For more information about alternative investments or endowment-based investing, visit adisa.org or realassets.advisor.com. Thank you.